Very good afternoon to everyone. And Sonia, welcome to the show. Welcome to the AthenaX Roundtable. Welcome for coming on. I know it's a really crazy and hectic time for you in Dubai right now, but you've made it.
Thank you, Neil. Very big pleasure for me to be here with everyone. No, Dubai is great. Nothing really interrupting anything. Business as usual.
That's very nice to hear. That's very nice to
Mm.
hear, especially that with the whole situation. But yeah, if it's business as usual, then it's I guess it's a good thing for everyone in crypto. Yeah. So yeah, let's dive right in. Tell us a bit about yourself. Who is Sonia Shaw? Give us a little bit of your background, how you founded OneAsset, and give us the lore.
Yes, very glad to be here with you, Neil. My big pleasure. So my name is Sonia Shaw. I'm the founder and CEO at OneAsset based in Dubai at the moment. Previously, I was working across quite a few different industries before I started OneAsset, starting from traditional business, entrepreneur, starting my own business and traditional finance, fund management, and then jumped to digital currency back in 2022. The last 4 years always have been to the crypto space. I guess over the last 15 years, coming from traditional business, moving to the crypto space, Web3 space, I constantly ask a lot of questions like myself, what am I really doing here? Like, what is the generally like how is the business really evolving with all this technology moving forward and what sort of problem we have, especially coming from the traditional investment space, understanding a lot of different asset class and then investors and then all these backgrounds. And then going to crypto, I look at all this blockchain technology solving a lot of problems. And then so it came to a question like how we can build something, bring this real valuable real world assets to the more accessible world, solving a lot of key bottlenecks that, the real world assets has. And then, of course, RWA came. And then when that moment, I actually left my previous job and then looking for the right direction and right starting point to, go vertically deep. So that's where we focus on the commercial real estate side, and which is also my experience from the previous industry as well. So that's where I am. Yeah, that's why I'm
Nice.
here.
Nice,
Yeah.
nice.
Mm.
At a face value, right? Like the similarities here is that these are big money kind of like industries here, and
Mm.
you seem to be in the center of all of it, right? So I do want to ask you a question here, right? Like, what are sort of like the similarities or the standouts here that you've seen across real estate and crypto, and what is it about the RWA industry that seems to draw you in?
Um, so the similarity is actually quite a lot. Like you mentioned, they're actually all we'll call it big liquidity. So I mean, real estate is one of the biggest asset class globally when you talk about it, more than 400 trillion, when you put everything together. And crypto itself has, proof itself, like that's where the direction will eventually the traditional finance evolve into, giving the programmability and transparency, efficiency that bring to the TradFi the traditionally other digitalization or securitization couldn't even offer. So um, I think one thing is they both deal with a lot of liquidity, a lot of investors, and then but they are absolutely on the different spectrum of this liquidity. Real estate is at the most stable, trustworthy layer of the asset class, and then crypto has gained its popularity and attention in the last 10 years due to the, mostly on the conceptual still, like the Bitcoin, the value reserve impact, and then also all these public chains that are offering DeFi capabilities. So these two, and then RW actually sitting right in between, that connect this real assets and then to the real accessible liquidity. So that's where I find not, I mean, not we're not just talking about one asset class. Eventually, every asset class, especially those ones that facing a lot of accessibility problems, liquidity problems, and then they will eventually be able to utilize this technology and RWA to solve their pain point. So I guess that's why this become the biggest topic now. But I wouldn't agree it's a narrative anymore. It's a transition that we're experiencing.
You know what? Yeah, you're absolutely right on this. The RW space is definitely growing. So let's talk about some numbers here, right? So in terms of RWA growth, research reports shows that the industry value is currently the industry size market size is currently about 26.5 billion, which has actually been a fourfold increase compared to almost a year ago. And according to Hashchain, a majority of this is led by mostly bond credit type assets, private credit, treasury bonds, which make up about 25 to $30 billion. And tokenized stocks are sitting around $1 billion, which is far smaller than these other type of asset classes. And real estate here as well hasn't really caught up to the same state as private credit type of assets. So why do you think this is the case here, right? Because commercial real estate, like you said, it's big liquidity. But the thing is that maybe it's not as liquid as people think it is. Why is this the case here, Sonia?
So that's a very good question. So when we talk about the whole RWA space growth, it's very fast compared to a lot of other so-called narrative we'll talk about. And then, predominantly because I think like coming from the US side of the push, tokenize their financial product and then distribute them globally, especially those top tier financial product T bonds or corporate bonds and money markets, corporate debt. But those products, the traditional financial products that already have huge liquidity, huge, they easily fit into the current compliance framework as well, and then easy to distribute, easy to value, easy to exchange hands. Because of that, it just simply bring them on chain. It gives them a other way of accessibility and then allow global investors to access them without too much limitation compared to traditional securitization distribution channels. But the problem with real estate is it has always remained to almost, the most illiquid assets class when you compare to those financial products like equity markets or money markets. And of course, because it's a physical asset, it's a building right there, it's a hotel right there. So operationally, bring them, we're not even just talking about on-chain, bring them digitalized and distribute them digitalized. There's a lot of pain points and problems is very difficult to solve. Ownership, transparency, jurisdiction barriers, liquidity barriers, valuations, standardizations, changing hands, and then also long settlements. So there's a lot of embedded challenges when it comes to this asset. But that doesn't mean this asset class is not good. For commercial real estate assets, it offers very stable income. And then the best part is it's not really necessarily correlated with a lot of crypto investment products that we're seeing in the market. And then it can potentially offer a very good hedging instruments if we are able to bring them on chain. And then so solving this problem is no longer a technology problem. It becomes a operational and programmable problem combined. How you actually solve the wrapping structure, the ownership enforceability, yield distribution, jurisdiction barriers, settlement barriers, and liquidity and secondary market exit strategy as well. All these things, it comes one big ecosystem to solve, not just one action point to solve.
Right.
But it is actually premium investment asset class, and a lot of investors they actually prefer to have this sort of asset class because it's physical. It's safe, it's more transparent, it's more safer, and then especially for a lot of institutional family office allocators, it offers very, very good risk discipline. So we are sitting in this like there is a good assets class, and then there's a lot of problem need to solve, and then we see that opportunity. And I think from the regulatory clarity side, also a lot of jurisdictions pushing that as well. So timing wise and everything is just making sense now.
Nice. I want to get into a little bit about that on
Mm.
regulatory clarity, right? And probably one of the reasons why they're pushing as well is because there is a matched demand behind this force. So I
Mm.
would like to ask, before we go on into finding out what's wrong with the bureaucracy and all that kind of stuff. If let's say ownership was solved, if liquidity was solved, and we have a product that a retail user can come in, stake some money, or maybe an investor stake some money, what kind of returns can they expect over a per annum period?
I mean, when it comes to commercial real estate, there's a lot of factors behind it. If you run it as a class, it depends on the investor's risk appetite, right? So there's a tier of, how you actually categorize the investments. You go into premium markets that offer you the best stability, the best in terms of the geopolitical stability, economic stability, and structural and then compliance stability. And those markets give you the best, or say capital reserve, and then potentially capital appreciation. It may not offer you the best yield, but certain investors, this is what they're looking for, like especially for pension funds or for retirement funds. All they need is a stability and capital reserve. So those ones are we, talking about probably sit around 5% ish. Depends on, what sort of region and markets you go. For example, in Australia, Sydney, if you go to the center, Sydney, like if you talk about net yield from a commercial office, can be something sit between 4 or 5%. It's very low, but certain allocators, this is what exactly they need. They need that security, they need that safety, and then capital safety. And then, of course, there are a lot of opportunities that when we go in certain markets that a lot of investors not able to access because the specific economic characteristic in that region offer you a way better return. Take Dubai as example. I mean, I know it's not the best time to talk about it now, because the regional conflicts in here. But when you're looking at Dubai's real estate property investments, traditionally everyone can only just buy residential because commercial real estate supply is very, very limited and it's very capped as well. And then the accessibility only limited to high ticket buyers and institutionals. And then like if you're a investor, retail investor, that you almost cannot access those markets. And then but giving the regions focus on, grow their tourists, grow their global investments, and then also focus on fintech, technology, AI, they actually attract a lot of new business coming into the region. Of course, for tax purpose, for regulatory clarities, and then for just like the location wise connecting to the east and the west, it offers a lot of advantages. And then because of that, demand is actually uncapped. A lot of demand coming in for commercial real estate, and then tourists as well. Then that hotel business, resort business, and also wellness as well. Like, people come for longevity treatment, or so there are a lot of specific niche in that space a lot of people can't even access, and those niche can easily offer you more than 10%, sometimes when look at certain opportunities like 15% of the return. And compared to a lot of other unsafe, not really as safe as disciplined investment as a class, this is actually very, very attractive, even for, retail investors. Because it's accessibility, a lot of people just not aware of that or not able to. I think having this platform that able to have a very streamlined tokenization infrastructure and a very regulated distribution channel, it will allow us to access a lot of really, really premium opportunities, and then offer investors something they're not traditionally able to.
Yeah, and I think that's super exciting because you've got
Mm.
rates which are safer and they are better than treasury notes to in some comparison. And at the same
Yeah.
time, you've also got the ownership complexities of the real estate, which can lead to asset management strategies as well. And I think that would also be part of that demand which you were expressing. Very exciting, Sonia. Okay,
Thank you.
let's get into that one by one here, right? But before we get into full blown, like, yeah, let's find like the best strategy for profit and whatnot, let's talk about the not so sexy stuff, which is regulation and compliance in different countries, right? And
Mm.
in my humble opinion, no regulatory body essentially wants to make the first move with a new asset class because of the fear of being wrong. And
Yeah.
this kind of makes the problem very systemic because risk is reduced with bureaucracy, right? And this
Yeah.
leads to slower reaction times. But you've had some success with some of the regulators because you're on the ground. Give us an idea of the openness and the progression of some of the regulators that you work with in the market, and who are the governments or the policymakers here that are doing things right?
I can tell you almost all the major capital markets governments are actually looking at the RWA very closely. Of course, like leading by the US government, the market structure bill being pushed very hard, and so give that clarity. And of course, UAE has always been the leading role globally in the digital assets regulatory regime. And then I've also had some brief touch base understanding with the Korean government and also Singapore government. So everyone absolutely they know this is where it's going, and then it's just a matter of how to navigate their existing regulatory framework. Because when it comes to RWA, there's a lot of space fall into the traditional financial regulatory framework, and then how you actually bring something that encourage those it's just not innovation, but we call it transition of the new investment space, but not to, jeopardize the existing financial regulatory framework and structure and or disturb their existing status quo and then, disturb the economic growth. So I think those are the questions a lot of governments are actually looking at and understanding. In the UAE, they always have been very, very pioneer in this space. And given the fact the region has been growing in the last 20 years. So they don't really have a strong legacy system to push back on, the technology part. And then they had one of the first governments that actually established a digital asset regulator body just for that space. And also very, very, I think that's why they give them a lot of advantage to attract business and investment to this space, because clarity, right? So, and also when it comes to traditional, and as I mentioned, traditional RWA assets tokenized, and then you also need to navigate with the existing regulatory bodies. For example, for the real estate side, of course, the land department has to also be on board with that. And then the Dubai land department is also very, very visionary. They've been, pushing on the tokenization of the title deed. But not to say every other jurisdiction land department will do the same. When it comes to land registration, it can be very, very complex. When it comes to different, of course, that's why when we're doing the tokenization platform, we also need to utilize other structures to accommodate that, like SPV structures to accommodate the title deed requirements in different jurisdictions. So this sort of momentum is definitely very, very good across different regions and different countries. And if we talk about how fast and robust it is, I think UAE is definitely a bit more robust. But Singapore is also they're actually pushing a lot of on the other financial products like commodities, tokenizations, carbon tax, carbon credits. So they're pushing on the more how they build the proper liquidity and market structure, and rather than just focus on headlines. So that's why I think Singapore always has been fundamentally very strong when it comes to financial service, because they always try to build something fundamentally right from day one. So it's also definitely a good momentum in there as well. So it depends on what you focus on doing, and then in this whole chain, what you're trying to focus on, then you probably try to choose which one that work well with what you're trying to do. And then at the same time, you can also help the regulators to understand a bit more while you're doing that, because they also trying to understand and experiment on, step by step. But it's happening everywhere.
Yeah, very, very interesting. And yeah, thank you for going to that much detail. And I think that what what you said about just having every major capital market just taking that step forward. It was really indicative that they're looking at this space very seriously,
Yeah.
and they're looking at ways to actually tokenize even more things than.
Mm.
Do you think that the recent crypto market crashes is reflective towards their reception of tokenized asset classes or RWAs, or have we sort of decoupled away from all of that kind of like thinking?
Um, I think the whole RW space, even we try to, I mean, I would also call it a whole new industry. Even like it's a whole new industry that happening, but it's not really completely decoupled from the crypto market yet, because there's still a lot of talk based on the crypto market, liquidity and then crypto market, momentum. But moving forward, I would see this as a opportunity rather than just pure, crush and negativity, because it gives a lot of builders and investors a time to really sit back and think, okay, I cannot build another perp desk. I cannot build another pump or fund. I cannot build another token. Just talk about something that remotely feasible in the next 2 3 years or generate actual return or actual use case. What really is needed in this industry now is something everyone can access, everyone can trust, and everyone can, jump on board without second thoughts. This is a good time for RW to really, I would say, gain the main focus, because this is where the real use case is. We see blockchain technology itself can be really utilized in something broad sense and massive adoption sense. So I think it's a good thing, the market cooling down. So everyone understand the crypto market is not about just altcoin. It's not about, what is the price of Bitcoin. It's about what is the real use case of this technology.
Yeah, we've gone past going to the moon, so they
Yeah.
say.
Everyone come back to Earth now.
Yeah. Well, that is good to hear. Yeah, so yeah, I think that the market is maturing, and
Mm.
definitely your space is also maturing here. Okay, so you've got eyes on tokenized real estate, and essentially I believe that it's your duty as a company, as one of the industry leaders, to essentially grow the market. So I would like to ask you to take us a little bit into the strategy room, because this is a very wide and also very niche two-sided market. You are a niche in one of like the biggest liquidity markets in the world. So I want to ask you a few questions about OneAsset. What are you guys doing internally that inspires your approach to your go-to-market strategies here? And I think how you segmentized the different asset classes and the yields associated with those classes are very important. So my first question, is going to be, how do you look for suppliers, and how do you, assess the bargaining power of buyers in relation to your supplier?
I think that's definitely a very big business strategy question we constantly ask ourselves as well. So when we establish our niche, like the positioning of the market, we try to stay as independent as possible. By independent is we stay on the issuer layer. We make sure whatever we build, the structure is regulated, it's standardized, and it's open and transparent. And then so that's saying we are not a asset holder. And then so we are investor facing, and then we have in the distribution side, we have a lot of focus on the institutional side, and we build the product based on institutions requirement, which means highly risk disciplined and then highly structured and regulated. If that fits the institutional requirements, that will protect the retail investors automatically in a way, because that discipline is very, very strict. And then so with that saying, like if we have a very disciplined distribution strategy in China, we need to make sure we offer good assets. So tokenizing an asset doesn't mean that asset is automatically become good. If it's not good yield, it's not good yield. That doesn't matter. It's on chain, off chain. It's not what we're trying to do in here. So it's more of how we can use the infrastructure, open distribution channel and discipline regulated on-chain structure to give us the ability to select the premium opportunity globally, not just focusing on one region, and then the investor can only have one type of investment in one region that face one risk factors in one region. So that being said, we need to have, I mean, even though we're not an asset manager, so all the investors, when you invest, your money goes directly to that asset. It could be the hotel, could be the building. It's not like your money in a fund and that funds is distributed according to our distribution. It's not like that. We are a connector, but at the same time, we're working as an asset filter as well. So we do have a very strict asset screening process, and then also try to focus where the future of economy growth as well, because commercial real estate highly related to economic growth and population growth. And then so not just being like broadly, we tokenize everything and then everything that come to us. So it has to fit our due diligence criteria process, and then also going to the direction. For example, we focus a lot on the AI sort of infrastructures, data centers, computing manufacturers, and then or surrounded ecosystem and well-being as well, wellness centers, clinics, hospitals, and then potentially in the future government infrastructures. So all this vertically focus also allow us to have a laser focused eyes when it comes to asset selection, and then that make sure that the investor side, we don't have to worry about losing investors on their end.
Right. Very exciting. So what you're saying is that, so well, I'm trying to think about like how stringent is the process now. What sort of like big names do you have? Because I want to feel a little bit excited right now. I want to know who, if I go with OneAsset, if I put a little bit of money inside, I'm actually going to have a tokenized ownership of a massive company, right? So, so I want to know like what's in the pipeline for you from this angle here.
Well, I cannot disclose anything, I mean, because of a lot of confidential problem, but I can give you some sort of explanations like, for example, certain governments, they have a lot of initiative building a lot of data centers, AI data centers that requires quite a lot of initial capital. But moving forward, long term, that's actually a very, very long term stable infrastructure for a lot of governments and for a lot of economies. So those sort of directions, and then of course, like when it comes to data center, you gotta have the location, the cooling, the warehouse, the and also the electricity, and then it goes to the next one, like electricity, green energy, or we're talking about solar or anything. So there's a lot of, you can go so much above and beyond when you have a laser focus in certain region, certain area, certain that offers you. It's not really just we're talking about 5% return anymore. We're talking about you grow with the whole industry as you go. So this is, of course, in the longer perspective we're aiming for. But beginning, of course, we want to focus on some really good bargaining yield-bearing assets because when it comes to yield, like established assets, the acquisition is so important. If you overpay at acquisition, it takes so many years to recoup that loss of overpricing valuation and purchase. I mean, I know a lot of people probably looking at the UAE region is a bit critically now, but I see opportunities as well. I don't see the problem as it's going to be a long sustainable problem. It's eventually the economy will come back, so there's a lot of potential good opportunities on the purchase side, offers better yield return because you can actually bargain and get a good deal. So there's a lot of things cooking, but yeah, well, you'll see. Yeah.
Nice, nice. Yeah, super, super interesting, super exciting. I think
Yeah.
that what you just told me, having tokenizing projects that are government led, actually really just opens up the door for a lot of creative strategies in terms of project financing, trade financing, and also overall infrastructure building. I think this is this is key. This is critical for a lot of B2B sort of strategies and discussions. It's making me think now, like going back into the strategy room with your VCs, with your LPs, right? Because now you've got a product which they can tokenize, as sort of an avenue for them to take out a loan, for example. Maybe I won't use this example, but I'm just saying that you could tokenize it and that's one of the use cases. But you're also competing against other TradFi or other existing legacy services in the market. So, what is the kind of investor profile that you interact with that are actively making the decision that says want to tokenize this project, this building, as opposed to just going to a regular bank?
Um, I wouldn't say we're replacing the existing infrastructure that's already there. I mean, like given the whole technology shifting globally, and then the whole economy outlook's also shifting quite dramatically, industry shifting, change of, the labor structures and everything. So there's a lot of things happening. We're talking about next 5, 10, 20 years that we are trying to, anchor for like at this point. And I think a lot of investors also look at it that way. Following the traditional legacy structure, yes, absolutely safe. It's comfortable. That's the job. But how they actually position themselves for the future is also the question they're asking. And then for the future, not just talk about a asset class. It's more like how we can potentially make sort of like illiquid asset class more liquid, and then produce or create more product on top of that, and then that becomes a whole new market just because of that. And then all these sort of things, like we're not trying to take a business away from the traditional, distribution channel or distribution or the product like pool. Like we are trying to offer something where the future grows. And then also for investors, they also need to look at something like, can I repeat these products? Like when I invest, it's not just one off. For example, if they have to go a location to buy a building, and then that becomes a one-off investment, that actually offers a lot of inefficiency for the investment. So if what we're building is we bring some like a asset class that traditionally has the least efficiency when it comes to transactional frictions and then cross-border structure limitations. And then any investor, when they invest, like they look for high capital efficiency, high velocity if they can, but real estate usually cannot offer that. So if we can offer, we have a product that allow us to create or give that efficiency and then shorten the capital investment life cycle. And then that creates more efficiency and creates more even angle point for them to raise more funds. So it benefits everyone in a way, I guess. So that's all I'm saying. Like, we're definitely not replacing anyone. It's just one of the future trends that, I would say that eventually everyone will look at. And then at the moment, we're talking to certain funds and family office, they already have certain allocations. They need to focus on that perspective to make sure in the 5-10 years time, they're not falling behind, not understanding or already tried and then understand the risk factor behind it or the benefit behind it. So I would say that that's how probably we look at it.
Yeah, and these are really visionary type of like assets which you're essentially building, and the strategies there as well. Like the more I go into this conversation, the more I see how what you mean by 10-15 years is kind of like the whole like timeline.
That's why we're not so worried about the current market correction or how cold the market is, like, because we're not really building anything based on any market narrative.
Yeah, absolutely. You're really building for the future. And
Hopefully, yes. Yeah.
and I like that you brought up that you're not building for market sentiment today, and because media hypes up everything all the time,
Mm,
right? So
mm.
I am thinking, right, is it too early or is it too late of a time to get into RWA? And this is more of like a personal question to you. If let's say you had to, God forbid, something happened to you had to restart all over again in
Mm.
this year, what would you do differently? What kind of like areas of specialization would you enter into the RWA market?
I mean, to answer too early, too late, I wouldn't say too early, too late. I mean, just on the real estate part, back, as early as 2018, I think 2019, people already experimenting the, tokenized real estate investments. It just like, come from, I think some of them using the NFT back in the days as well, like different technology program technology stack. But the problem now, like I think we're in a really good time. Not too early, not too late, actually perfect timing because when it comes to RWA, it's so much more than just technology capability itself. It's actually more of the government's regulatory clarity, transparency, and then because without those, the institutional will not move, and without institutional, no major asset class will move, and then no major liquidity will move. So, I guess we are just at the beginning of that. If you really have to say too early, too late, we're still slightly early, but really not at the very, Wild West stage anymore. Like things coming into more clarity, more structured, and then more direction definitely um, getting, formed. So when you talk about like if I would have done anything different, I think I would do exactly the same as what I'm doing if I had to choose a second chance. And then in terms of like how would I like the market to really go about it, I feel the problem with not really problem, but crypto is a fast moving concept focus and then a community focus and then starting from retail sort of a narrative or like industry. That giving the problem is like people stay on vague concepts rather than the actual operational side of the projects. So with RWA, I saw, I mean, I think back in 2023, when I did some on stage topic in Paris Blockchain Week, I even mentioned about, I said people were talking about other things like DeFi meme, DPIN. They said it's gonna be all the main narrative that are gonna take the lead. I said I think RWA gonna be the one that taking the lead. Back then, a lot of people don't even know much about RWA space. And then because I look at it fundamentally, like the problem is like where is the money, where is the main drive, and then where's the liquidity, and then RWA is the part that drives the liquidity. And then look at US legalizes stablecoin. Why? Because when they legalize a stablecoin, they bring the liquidity, and the next thing they have to do is to focus on the actual asset part. Because without those assets, where's the stablecoin going to grow? Like how are they going to attract those money come on the stablecoin rail? So it's become unquestionable, not even a question that's already here. It's not early, it's not late. This is the right moment for anyone if you want to look into. But I also want to say that don't just jump into it because it's so hot. You gotta sit back and look, okay, what's your understanding, what's your knowledge, and what problem you see, and then that's how I started this problem, like the project. I didn't really start from, equity markets or, T bonds or anything because that's not my knowledge space. I don't really know the potential problem facing there or what I can do differently to change something they already have. But with commercial real estate, I understand like how it has been and then what can be changed with the whole RWA space. And then I guess that's just come back to the first principle logic, right? Like what problem you're trying to solve, and then forget about what everyone else doing, just like what you can do.
Yeah, yeah, for sure. And look at where all the deep in guys are right now. Like, where are you? No,
Well, they change
and
the name, and then it's still, I mean, it's deep in its infrastructure. Infrastructure can be RWA as well.
yeah, yeah, exactly. So you must be feeling really vindicated right now to know that all things as long as you
Yeah.
solve things from the first principles, you're good.
Yeah, I guess so. It's just a matter of time. Like you cannot, anyone can be right, anyone can be wrong. So if you're giving a bit different time length, like
Yeah, absolutely. Absolutely. Well, thank you, Sonia. This has been a really, really interesting conversation. We are approaching towards the end of the show, so I would like to ask a few closing questions. When we talk about tokens, we talk about RWAs. It's still a very niche sort of industry. What do you think needs to change in terms of for everybody, so that consumers are able to one day wake up and say that, okay, maybe tokenized real estate is a viable future. Maybe it matters. What do you think is the thing that needs to happen today?
Um, Definitely from the industry perspective, I think we need to make it a bit more like more educational in a way for consumers to understand tokenization is not just minting a token. It represents a real ownership or contractual rights or yield distribution rights or participation rights, like what sort of rights it's representing, what you really investing. It has to have the clarity. It cannot be vague, saying, "Hey, I tokenize this, solar panel farm, and then yeah, you can invest, and then this is." But actually, what's behind it? What's the wrapping structure? What is the regulatory structure behind it? For retail to really look more deeply in detail, those sort of rights wrapping. And of course, from the regulatory perspective, it's very, very important. Like they offer the credibility and confidence to the consumer. Of course, for regulatory perspective, they key focus is always on the consumer protection and then how they can offer something consumers feel comfortable, just like we open our bank app and then we can invest in anything in the bank app and then we don't really need to worry about anything. That also need to come from the regulatory clarity and enforcement. But the regulatory part, it has to be something executable and not just sandbox experimenting. I think in that sense, UAE is doing very well. Like Vara in Dubai already have very clear paths how they regulate the RWA space. And then how they regulate these programmable assets on chain, rather than just, experimenting one or two. So if you have more clarity, more guidance, like executable guidance for business to follow, and then that will encourage business to invest more and to push more, to create better product that fits the markets. So this, I guess, is like the consumer understanding government protection needs to really work side by side to really push this industry.
Nice. Wow, that's a very nice, sweet note. And what is the best way that people can find you and get involved with OneAsset?
Oh, I think you can find us everywhere. We make sure we do that. Our marketing. Well, you can always jump on our website, oneasset.io, or you can find us on LinkedIn or social media. I myself also quite active on my X accounts and LinkedIn accounts, and then we actually be sharing a lot of progression of the industry, not just what we are doing, but also the questions need to be raised and answered in the industry from all different perspectives. We also very welcome people to share their insights. And then, I mean, building is never just one company's job, and it's never just about one product. We're actually shaping or reshaping the whole financial industry to a different era. So it cannot be just one asset. It has to be a lot of other participants and players come to the market and build together. Yeah, so definitely reach out if you have anything that we can talk about together.
Super, super cool. Thank you so much, Sonia, for coming on the show. And yeah, it was an absolute pleasure to have a chat with you today.
That's my pleasure, Neil. I really enjoyed the conversation as well. We should do it more.
We should.
Thank you
And
very much.
yeah, thank you. And to all of our audience, thank you for tuning in. And I will see you at the next episode. Bye bye.